Tuesday, March 23rd, 2021, Monaco 64, home of alternative economics and contrarian views. This made me laugh. I was watching yesterday a small conference, Zoom conference, amongst central bankers and a reporter from the FT. And Jay Powell basically said, he compared Bitcoin to gold and said that Bitcoin, and I guess indirectly he said gold, was speculative, not a stable store of value, and that it wasn't backed by anything. I had to laugh. We're going to look into that today. Before I start, though, I like to say yesterday I went into the city of London. I went to see Oliver Temple at Gold Investments. They're near the Bank of England. So I walked from London Bridge through the city. And I have to say, it was like a ghost town. A lot of businesses closed down. Very few people around. I was able to get a few of these 100-gram silver bars. They're very nice. They're metal ore. They've got the certificates here as well. I think this one was cast back in September of last year. So it's a fairly new 100-gram bar. I thought it was quite nice. It looks like the Rothschild 100-gram gold bar. So Oliver and Simon were there, had a chat with them. And as I said, it was empty. So this morning, the city, of course. So this morning I saw this headline about the UK unemployment rate surprising and dropping to 5%. It was expected at 5.2%. And I had to laugh, really, because the unemployment in this country is more like 10 or even more, 10% or more. The only reason they've been able to keep it down is a statistical exercise. They've spent, over 400 billion to keep people from signing onto unemployment. They've kept the furlough scheme that was supposed to end in October of last year until October this year. So it's a joke. Anyone who believes that the unemployment rate is 5% in this country needs to have his or her head checked. So as you can see here, we've had the worst economic crisis in 300 years. They've told us that it's been the worst crisis in 300 years, and yet unemployment hasn't even budged that much. You look at it back to the 1980s. So these people are not really truthful with the data about the economy, about money, and that's what Jay Powell confirmed yesterday. So let me play the clip here. I'm going to put a link to this video. It's from CNBC television, unfortunately. But this is what Jay Powell said to Gillian Tett. She's the FT reporter who was interviewing Jay Powell of the Federal Reserve, Chairman of the Fed, Agustin Carstens, who's the managing director of the BIS, and Jens Weidmann, who's the president of the German Bundesbank. I'd say Agustin Carstens must like his tacos quite a bit. You've probably seen pictures of him. He is Mexican. That's why I said he likes his tacos. So let's play this clip here. And Gillian Tett was asking Jay Powell whether they're looking into central bank digital currencies because of Bitcoin. And this is what Jay Powell says.
First, I spent 9 years here trying to get people to call me Jay, so please.
Okay, that's going to be cool.
let me say, yeah, absolutely. Let me just take a step back and say that our work on CBDCs is not primarily motivated by the appearance on the scene of cryptocurrencies and stablecoins. It really is fundamentally, technology has made it possible for us to offer a new form of trusted money and that sovereign anchor that has been so important for economic development for a very long time. and we're looking carefully at whether to do that. So turning to your question, crypto assets, which we call them crypto assets, they're highly volatile, see Bitcoin, and therefore not really useful as a store of value, and they're not backed by anything. They're more of an asset for speculation. So they're also not particularly in use as a means of payment. It's more a speculative asset that's essentially a substitute for gold rather than for the dollar.
So there you go. I guess Jay Powell hasn't seen that the fiat dollar, the Federal Reserve note, has gone from 1/20.67 of an ounce of gold to 2,000 of an ounce of gold until last year. I know the dollar has rebounded a little bit, the Federal Reserve note. What a joke. And to say that gold is speculative, that gold is not backed by anything. Well, gold isn't backed by anything, he's right, but it doesn't need any backing because it's money. I thought that was quite amazing to compare, to make that comparison. And even Bitcoin, I would say, it takes more effort to create a Bitcoin than to create a dollar or a billion or $1 trillion for that matter. I guess Gillian Tett, being a journalist for the globalist FT, for the FT that denigrated gold back in 2004, and I've spoken about this before. Just look at this editorial they wrote about gold, that it was useless and pointless. If you want, you can pause this video and read that editorial. So I wanted to go through a little bit about what all these guys said. They were talking about central bank digital currencies as well. And the feeling I got is that they're not in a rush to create central bank digital currencies, and that they're also not in a rush to circumvent the commercial banks. I got that feeling from the German central banker and from Jay Powell as well, that they want to try to keep what they call a two-tier system. What is a two-tier system? Well, it's a system we have now where the central banks deal with commercial banks through reserves. They call it reserves instead of money or currency. And then the commercial banks deal with us through currency, right? Or through digital entries. So the central banks are not directly involved with the public. And I think that's what they want to keep. So I don't see a lot of people are saying that I think the commercial banks they're gonna pull the plug on the banks and get rid of them, and the central banks are gonna be controlling us directly. I'm not too sure about that because I think the banks came before the central banks, especially in the U.S. and banks like J.P. Morgan, Citibank, Bank of America, Goldman Sachs, they own the regional Federal Reserve banks. So I don't see them trying to end this two-tier system, as they call it. I think what they want to do with cryptos or central bank digital currency is make the payment system more efficient, so that maybe what they call reserves can flow quicker, easier, and without trouble through the system onto the consumer's hands. Are they going to extinguish, or how can I say, get rid of cash? It doesn't seem like they want to do that quickly, especially in Germany. I think yes, they're probably moving into a cashless society, but I think it will take longer. So I'm not too negative about that. It doesn't mean to say that we should not try to fight against it. And the other thing Jay Powell said, that to have a central bank digital currency directly to the public from the central bank. So getting rid of this two-tier system would need an authorization from Congress or a new law. That's what he said. And I think he even though he's clueless or he's just being dishonest about gold, he knows what he's talking about there because he's trained as a lawyer. So some of the other things, the guy from Mexico, or BISMD, the other thing I thought was really funny, I had to laugh. This is what he said: fiat money works because there is a strong institution, i.e. the central banks, that provides trust to money. And that is what makes money work in the world. I mean, these guys are really comical. I'm sure a lot of people, the majority of people out there, even experts and economists, are going to buy into this. But we know that it's all... It all doesn't make sense. We know that central banks are actually the problem. And we know that gold and silver have been and still are money. They are the most stable store of value, and they have been for thousands of years. Yes, they're not used as currency right now because we have legal tender laws that prohibit people from using it. But up until the 60s and early 70s, people were still using silver as money and currency. Up until, I guess, 1933, people were still using gold as money and currency. In Europe as well before World War I. So it's only because they've made it illegal. Just wanted to give some more proof here. And this is from a central banker. The guy who helped found central banks in the Philippines, in Sri Lanka, or Ceylon, as it was called at the time. Guy who worked for the New York Fed. John Exter, as you probably know. This is what he said in 1972. Currencies today, or what Mr. Carstens calls fiat money or fiat currency, are IOU nothings. So here these people are saying that gold is not backed by anything. It's highly speculative. It's not a good store of value. And we get this from John Exter. He says, now that the international monetary system we have so long known has broken down and the world is groping through monetary reform for a new one, it is time to consider some fundamentals. What is money anyway? So here you go, Mr. Powell. A lesson for you and your counterparts, Mr. Carstens and Mr. Weidmann from the Bundesbank. He says, first, it is a means of payment or a medium of exchange. I prefer the first phrase. It is simpler. We all use money to pay our bills, to buy goods and services. We also accept money when we sell. Second, it is a standard of value. We quote values of goods and services in terms of it. The resulting ratios are prices. Third, it is a store of value. This is for Jay Powell here. We hope to avoid loss by holding it. Money holds its value if it is scarce and remains scarce. Mr. Powell, it has to be scarce. You can't create 120 billion every month. Scarcity is the keystone of store of value money. Today, no money in the world fully performs all three services. National currencies are being used as means of payment and standard of value money. Yes, they do work as that. But none in this inflationary age is an assured store of value money. In fact, a foremost concern to voters and politicians everywhere is that so many currencies are so rapidly losing their value in terms of commodities and services. Commodities like gold and silver, which are being used as store of value money, are not being used either as means of payment and standard of value money. Thus, the world we have so long known, in which most currencies are redeemable at a fixed price in a store of value money like gold, is in disarray. People are confused and wondering what money they can trust, sensing the instability of the whole system as a whole. They turn day by day from one means of payment money to another in the foreign exchange markets. Yeah, it's the casino, the FX casino. And and much more gradually to store value money like gold in the London and Zurich gold markets. So there you go, Mr. Powell. From one of your own, right? From a central banker. I think John Exter would be laughing his head off if he was still alive listening to Jay Powell. So the other thing that Carstens said is that central bank money is a final form of payment. Well, how can a payment that is paid by a debt instrument, that a payment that can never be extinguished, be a final value payment? I mean, only gold and silver really extinguish debt, Mr. Carstens. I thought it was really funny. I recommend you watch this. You don't have to watch the whole thing. I think the where Powell talks about Bitcoin and gold is around the 27-minute mark, just to let you know. So with that, let's quickly look at where we are in terms of the markets this morning. It's 8:25 a.m. London time. We've got spot gold at 1739, so it's basically unchanged. It's been as low as 1730, as high as 1740, so fairly narrow range. Silver still under pressure. It's down 17 cents at 25.56. I think the low yesterday was around 25.35. High's been 25.85 this morning. The low 25.50. But I'm not concerned. As I said, I bought a few of these yesterday, and silver can move very quickly anyway. We've got the Dow futures down 86, NASDAQ 100 down 38, S&P futures down 11 points. Currencies, we got the pound down 0.2% at 138.34. The euro is down a quarter at 119.01. The dollar is down slightly versus the yen at 108.73. The dollar yuan is down a little bit at 650.38. What about the Turkish lira? I saw that the president of Turkey sacked the head of the central bank. Currency collapsed or dropped quite a bit. I saw the yields went up a lot. I think the 10-year yield is like 19%. I'm not surprised. This has been happening in Turkey for years, for the last few years. I know some people here in the UK who have put their money in Turkish lira just because it has a high interest rate. But the reason it has a high interest rate or yield is because it's very risky, the currency. That's all I would say. And that's why central banks like the ECB, who increased their QE last week, want to keep yields from rising, because rising yields point to the fact that these currencies are really worthless and not worth even the money or the paper, that it's printed on, or the keyboard it's typed into, if you want to call it that. What about the commodities? We've got high-grade copper down slightly this morning, still at 411. It's down just over 0.5%. The WTI crude is down 1% at around 60.80. To finish off, quickly look at the bond market. As I said, I think they're going to keep financing purchases, and by they I mean speculators and investors, by borrowing in the short term. I think the 3-month T-bill rate or 1-month T-bill rate in the US yesterday went into negative territory. So yeah, the 10-year yield is continuing to drop here. We're now at 165, down over 3 basis points. So yes, last week we topped at 175. So I think that's the rate that we're going to have to watch, 175 now. That seems to be a limit for the powers that be. And how come gold and silver are not rebounding even though yields have come down? Well, a little bit of manipulation, I guess, and a little bit of the fact that markets are not, they don't always act exactly like they should. I think eventually we're going to see gold and silver much higher. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.